Hi everyone, this is Zenia Taubina, and this is the inaugural review of really the charts that I use for the weekly service. And this is per client's request in order to help walk them through the analysis in the weekly service. But for the time being, I'll be sharing it publicly, and hopefully they'll be of value of those who are not subscribed to the weekly service as well. So this is going to be a 10-15 minute video going through the 6 markets that are analyzed in the weekly newsletter, and really talking about the positioning, medium-term positioning in those markets and what we'll be looking out for this week. So let's begin. First market is S&P 500. So that's the chart you should be seeing in front of you. And in this chart, I'm capturing the segment of the rally off of the 2022 lows that I think is most relevant. So here my expectation, as was voiced leading into the year 2025, is that firstly, I continue to expect higher for as long as this red line over here, which is 49.53, I believe, is not broken. The question is it going to produce the higher high first and then a bigger pullback, or has it already topped and heading for the bigger pullback? So the January low of 57.73 is an important low, and that's this first red line here. We so far are holding it, and really even a test of that low, a minor breach could potentially still be constructive. But if we break the second red line over here, which is 56.51, that would not be constructive and would suggest that the rally off of this low has topped. So for as long as this zone over here is holding, one more high will ideally be seen before the bigger pullback. So key time this upcoming week, on the upside, a rally over 60.27. So that's this green fib right here. That's a 61.8 retrace, would be the earliest indication that the low held and that we're heading for a new high, with the target of 63.40 to 65.84 opening up upon a new all-time high. So that's S&P. Now let's move on to the next market in the write-up. So this is Russell 2000, a very different posture. So what we have here is a rally off of the late 2023 low, which can be considered complete. And we've those that are subscribers know that we've once Russell breached this low over here, so that's about 2280-ish. That potential opened up, and to make that potential likely, we need below this red line over here, which is 1993. So far we're in the possibly complete zone, but not in a likely, we don't have a confirmation. So heading into this week, those that are subscribers know that I was bearish after 22.59. So that's right about here broke. And we were positioned accordingly, certainly not bullishly. And so now we have a minor breach of the January low. And we may yet see a little bit lower. Really, I see 2080 as support for the near-term decline. So may or may not have seen the bottom of the immediate decline. To favor higher highs, it needs to rally over 23.26. So that's the Feb high, with earliest indication of bullish action over 22.40. So that's right around here. So anything that is, even if we do get a rally, but if it comes short of the 23.26, it could still be viewed as a corrective bounce on the way to lower. So this is very much a show me zone. So far, it is in a weaker position than S&P and NASDAQ, but so far we do not have a confirmation of a long-term top. Okay, Moving on to NASDAQ. If only I can find the chart. NASDAQ here. Okay. So similar to the S&P stance, ideally, rally off of August low is not yet complete. NASDAQ has already breached its January low, but so far only minorly, and it ended the day above it. So really not a strong enough confirmation of a top. Similar to S&P, earliest indication of bullish action is getting over 61.8 retrace at 21,510. So that's this green line over here. And it will take a rally to new new all-time high to open up this upside target over here. Now, on the downside, to confirm that the rally off of August low completed, it will need to break below 19,938. So that's the red line over here. So if that's breached, then this segment likely has completed with the support over the August low, and decline to especially the lower portion of this green target box would be a setup for the next push higher. That's how I see NASDAQ. Now, moving on to TLT. So this one, as those that are subscribers know, I viewed bullishly after the initial rally off of the January low happened. We are now getting the bullish upside follow through. So we're already in the first target zone. And if it declines below 90, then it will open up potential for completion of this corrective bounce to this target zone. And a stronger indication of such completion will be a break of 86.86. So that's the second red line over here. A break of that would be very bearish. It would favor the Jan low to be broken and potentially accelerating down. So definitely below the second red line over here would not would be viewing it bearishly. So far, we are still bullish in the weekly service. As subscribers know, we are overweight. Would not want to see it below this red line over here. On the upside, to begin to suggest that this was a lasting bottom, it needs to get over 94.85. So that's this red line over here. And if it can do so, then it will open up a target in excess of the 2024 high. So, so far still holding stands for higher for as long as 90 is holding. So at least somewhat higher into this target box and potentially beyond that. But we are now coming towards completion of the high probability portion of the rally, the way I view it. All right, next is gold. So let's find that. Okay, so this is gold. And as I've been steadfastly stating to subscribers and shared publicly, I do view it as topping. So here the pullback that we got last week is consistent with topping premise. Ideally, gold will hold over its prior high, so that's 257 and change, this red line over here, and produce a higher high, at which point this will be a very high probability setup for at least a meaningful pullback and potentially a lasting top. So in the absence of such higher high, it will take a break of 257, so that's this red line, to begin to suggest that it topped, and a break of 251.92, so that's the second red line over here with the red arrow, to make it likely that this segment has somehow topped. So then at that time, support will be in the vicinity of the November low, so this green area over here. And from there, it may yet try for another extension higher. So again, ideal path for the next couple weeks is a push to a higher high with resistance of 285. And from there, risks will increase substantially. Now, last and least is GDX. Those that have followed me know that my views on GDX have never been as bullish as on gold, and now we're starting to see signs that it may have topped. So for starters, this decline went deeper than it should have, but still kind of held the ultimate support area for another push higher. So far, GDX was unable to make a higher high. And last week, it breached upper support of 38.80. So there is a growing chance that a corrective top has already topped at 42.66. And that if it can get a bounce here, it could be setting up for a real breakdown in wave 3 or C. So this is probably the most treacherous of the underlyings as it currently stands. And below 36.84, so that's the red line over here with the red triangle. Below this line, it will become likely that GDX is in wave 3 or C. So that means that its minimum target is back at the late December low. So that's 33.42, with potential for as low as 27.12. So this zone. So really want to watch very closely this upcoming week. The scenario that I would love to see for clarity is one where gold makes a higher high, but GDX only does a corrective bounce. So that would be a pretty clear indication to me that it has topped correctly and that it's in a bearish stance. All right, folks, so that's it for today. Hopefully you find this video helpful. If you have any questions, if you have any interest in the work we do at XT Financial Services, feel free to reach out to me. Thank you.